Welcome back to the Deep Dive, your shortcut to being well-informed.
Glad to be here.
Today, we're taking a deep dive into the first quarter 2025 earnings call for Consolidated Water Company.
Yep, CWCO.
Our mission, really just to unpack the key results, get a feel for the story management is telling, and, look ahead at the growth drivers and outlook they discussed.
Exactly. Trying to filter through the noise, get to what really matters about where this company stands. We've combed through the call for you.
All right, let's jump right in. Start us off with the headline numbers from Q1 2025, the snapshot.
Okay, so top line revenue for the first quarter, it came in at $33.7 million.
And how does that compare to last year?
That's actually down 15% compared to the first quarter of 2024.
Okay, a 15% drop sounds, significant. What about the bottom line? Profitability.
Right. Net income from continuing operations, the part attributable to shareholders, that landed at $4.9 million. That works out to $1.31 per diluted share.
And the comparison there.
That compares to $6.9 million, or $0.43 per diluted share, back in Q1 of 2024.
Okay, so revenue down, net income down year over year. How did management, frame these results? What was the feeling on the call?
Well, they were pretty direct about it. They said these numbers were impacted pretty significantly by a couple of specific large design build projects finishing up last year.
Okay. So expected, maybe?
Sort of, yeah. They framed it as a transition period. The core message was that the underlying recurring business segments, they showed strength, they showed growth, and maybe more importantly, the future project pipeline looks promising.
So moving past one phase, setting up for the next.
That's the feel, yeah.
Okay, that makes sense for the top line dip then. Let's dig into that transition. Where did the changes happen within the different business segments? Yeah,
good question. The biggest shift, the most noticeable one, was definitely in the services segment revenue.
Okay.
It's a pretty substantial decline. $7.3 million down. And that was almost entirely due to wrapping up those two big design build projects, Liberty Utilities and Redgate 2, back in Q2 of 2024. So just to give you an idea, the construction revenue part of that segment dropped from like $9.2 million in Q1 last year to just $2.2 million this quarter. Big drop.
Wow, okay. So that expected construction fall off explains a lot. But you mentioned underlying segments showing growth.
Yes, exactly. And this is like the key point they stressed. Within that same services segment, the recurring operations and maintenance revenue, the O&M stuff, that actually increased.
Oh, interesting.
Yeah, it was up 9%, which added about $626,000.
Yeah.
And that growth is coming from their Western U.S. operations. They're leveraging TRK, their subsidiary in California and Arizona, and also RECC in Colorado.
Right, and that O&M revenue is much more predictable, right? Stickier.
Exactly. That stable income is definitely a positive sign.
Okay, so that helps offset some of the construction dip. How did the other segments do? Retail?
Retail segment, yeah, it continued its strong performance. Revenue there was up $786,000. That was driven by a 13% increase in the actual volume of water they sold.
And this is on Grand Cayman.
Yep, Grand Cayman, where they have that exclusive concession. Management really emphasized that this volume increase isn't just, a seasonal blip. They see it rooted in real population growth and more business activity on the island, something more permanent.
Makes sense. More people, more businesses, more water needed. What about manufacturing?
Manufacturing was also a bright spot. Revenue at $509,000, about a 10% increase. They said this came from higher production and, importantly, selling a mix of products that carry higher margins.
Some more profitable sales.
Exactly. And you see that reflected in the operating income from manufacturing. That jumped up 44%. Pretty strong.
Okay. And the last piece, bulk water. Usually pretty steady.
Yeah, bulk water revenue was basically consistent year over year, came in at $8.4 million.
Yeah.
Management just described it as, stable income generation.
Any minor changes there?
Just a small uptick tied to an O&M contract starting for the new Redgate 2 plant and an amendment to another contract, both kicking in mid last year, but basically flat stable.
Okay, so let's sum up the segments. Services down big on construction because projects ended as expected. But the O&M part of services grew, retail grew, manufacturing grew, and bulk was stable. How did that all shake out for overall gross profit?
Right, so the total gross profit for Q1 2025 was $12.3 million. That represented about 37% of the total revenue.
Or compared to last year.
It's down in absolute dollars from $13.9 million in Q1 2024. That dollar decrease is directly because of the lower gross profit from the services segment's construction side.
Makes sense.
But what's interesting is the gross profit margin, the percentage, that actually ticked up slightly from 35% last year to 37% this quarter.
How does that work if the dollar amount is down?
It's because the segments that grew, retail, bulk, and manufacturing, those generally have better gross margins than the lumpier construction work. So their growth helped lift the overall margin percentage, even though the total profit dollars were lower.
Ah, the mix effect.
Got it.
That explains the margin expansion.
Yeah.
And did they give a net income figure, including discontinued operations too?
Yes, they did. When you factor those in, net income attributable to shareholders was $4.8 million, or $0.30 per diluted share. That compares to $6.5 million, or $0.40 per share in Q1 2024.
Okay, so the headline numbers definitely reflect that anticipated dip from construction projects rolling off, but the underlying more predictable parts look solid, even growing.
That's the picture.
Which brings us to the fun part. What's next? Let's talk key projects, growth outlook. The Honolulu's seawater desalination project seems like the elephant in the room.
It absolutely is. It's the biggest near-term growth driver they have right now. It's a $24 million design-build project aiming for 1.7 million gallons per day.
MGD, right.
Right, 1.7 MGD. And they hit a really critical milestone just recently.
What was that?
The client, the Honolulu Board of Water Supply, officially approved the pilot test reports and recommendations. The key finding basically was that the desalinated water they produced is a reasonable match for Honolulu's existing water supply and, crucially, won't harm their distribution system or customer pipes.
Wow, okay. That sounds like a huge hurdle cleared, significantly de-risks the project, I imagine.
Absolutely. That approval really paves the way for construction to actually begin.
So what's the timeline now? When do shovels hit the ground?
The company's expectation, what they said on the call, is for construction to start early next year. That's assuming, of course, they get all the necessary permits lined up and the client gives them the official notice to proceed.
Okay, the usual caveats. They mentioned potential permit delays, though. Any more color on that?
Yeah, that came up in the Q&A session. Management clarified it a bit. Permit responsibilities kind of shared. Some permits, like site-specific things, archaeological studies, that's on the client.
Okay.
Building permits, health permits, those usually fall to Consolidated Water. They stress they're working really closely with the client. The main worry isn't if they can get the permits, it's just the timing.
Bureaucracy, right.
Exactly. Government agencies can sometimes take longer than you hope. They specifically mentioned the archaeological permit has taken a bit longer than first expected. So yeah, permit timing is the key thing to watch for that Hawaii start date.
Got it. Timing is always the tricky part. What does the revenue look like for a project this size? When does it really hit the books?
Well, the construction phase, that's where the bulk of the revenue comes from. They're projecting that mainly for 2026 and 2027. So once it ramps up, it's expected to be a major growth driver for that services segment.
And design work is happening now.
Yep. They said they expect to submit the 90% design plans pretty soon. And crucially, after construction is done, there's a 20-year O&M agreement attached.
20 years.
Plus 2 5-year extensions possible.
Yeah.
So that's potentially decades of long-term recurring revenue from this one project.
That's significant. And didn't they mention something about inflation protection on the construction cost?
Yes, and that's a really important detail, especially these days. Roughly 80% of the construction costs for Hawaii will be adjusted for inflation right when construction starts.
So they lock in their margin.
Pretty much. It's designed to protect their gross margin and profitability on the project, which is a huge plus given how costs can fluctuate over a multi-year build like this.
Definitely valuable. Okay, shifting back to retail on Grand Cayman. Besides the volume growth, what else is happening there?
Well, they recently got a new concession granted by the Cayman government that maintains their exclusive rights to operate in their service area. Good news there.
And the operating license.
They're in ongoing talks with the regulator, RECC, for a new long-term license. But importantly, their current license stays fully in effect until the new one is issued, so no interruption there.
Okay. And are they expanding capacity to meet that demand growth you mentioned?
They absolutely are. They're currently expanding their West Bay plant by 1 MGD. That's a 25% capacity boost. Expected completion is this summer.
Wow, soon.
Yeah. And they're also planning to build additional water storage tanks over the next couple of years. These investments are a direct response to that sustained growth they're seeing post-COVID and making sure they can meet peak demand.
Good to see them investing behind the growth. What about the manufacturing expansion? You touched on that.
Right. For their ARX subsidiary, they're building an additional 17,500 square feet of manufacturing space. That construction should be finished next month, actually.
Okay. What's the goal there?
Basically, to increase their throughput capacity, let them handle more projects at the same time. Management feels this extra space, plus the fact they've broadened their product and client base is helping to make that business less volatile than it might have been historically, stabilizing it.
Makes sense. Investing across multiple areas. So we talked about the services segment decline in Q1 because projects ended. What does the pipeline look like now beyond just the massive Hawaii project? Anything else coming?
Yeah, so for this year, 2025, they do expect overall design build work to be lower than the last couple of years, just given those big completions. Right.
Right.
However, they do anticipate seeing an improvement starting in the second half of this year. They pointed to 3 smaller projects they're working on.
Okay.
These total about $20 million altogether. They're either already under contract or right at the final contract stage. They expect these to generate revenue over roughly a 12-month time frame, maybe stretching into early 2026.
Any examples?
They mentioned a wastewater scalping plant in California. It's a good example of how they're using PERC's capabilities for different kinds of water projects, not just desalination.
Okay, so smaller projects bridging the gap while Hawaii ramps up. Any other irons in the fire for services, longer-term pipeline?
They're definitely pursuing other things. They mentioned a potentially sizable international wastewater design build project. It's in the Southern Caribbean. If they land that, it would be their first international wastewater plant project, which is interesting.
Diversification.
Exactly. They also highlighted opportunities in Arizona. They're in early talks there. And PERC is preparing 4 customized design reports, CDRs, in Arizona right now.
What are CDRs?
They're basically detailed proposals. If accepted, they often lead directly into design build contracts for wastewater treatment facilities.
Yeah.
They've done this successfully before in Arizona.
Okay.
And lastly, they mentioned their RECC subsidiary is giving them a way into the Colorado market, which is obviously another water-stressed area with potential.
So pretty active pipeline developing. How did management kind of summarize their key drivers for long-term growth then?
They really pointed to 4 main pillars. 1, the continued strong retail growth on Grand Cayman, driven by those demographics. 2, the stability and recurring cash flow from their Caribbean bulk water ops.
Okay.
3, the design build business. Hawaii is the big one, obviously, but supplemented by these newer, smaller projects coming online. And 4, the momentum and the new capacity coming in the manufacturing segment.
Got it. Let's pivot quickly to the balance sheet. How are they looking financially? Capital allocation thoughts?
Yeah, they're looking very strong financially. As of March 31st, cash and cash equivalents totaled $107.9 million. Huge cash balance.
Wow.
Working capital was $136.2 million. And stockholders' equity stood at $213.3 million. So very healthy balance sheet.
What are they planning to spend on capital expenditures this year, 2025?
For their existing operations, they're projecting about $9.1 million in CapEx for the full year.
Any specific projects called out in that?
Yeah, it includes about $800,000 for some new plants they're putting in the Bahamas, and also $1.2 million for that ARX manufacturing expansion we just talked about.
Okay. And with over $100 million in cash, what did they say about using that pile of money?
Yeah, they addressed that directly. Management explicitly said they are currently evaluating how best to use that substantial cash balance to increase shareholder value.
Meaning?
Well, the evaluation includes potentially increasing their quarterly dividends. They did just pay out $1.8 million in dividends in April, but they're looking at potentially doing more.
Interesting. So sitting on a lot of cash and actively thinking about how to deploy it. Okay, let's try and put this all together. What's the sort of overarching investor context or forward view coming out of this call?
I think this quarter really confirms it's a transition period for the services segment. Just as expected, with those big projects rolling off, the clear focus now shifts to getting that huge Hawaii project moving. Seems like it's progressing well on the technical side, and at the same time, rebuilding the design build pipeline with these smaller opportunities.
And the other segments are kind of holding down the fort and providing growth in the meantime.
Precisely. The strength in retail, driven by what seems like real sustainable growth on Grand Cayman, plus the momentum in manufacturing, those are really offsetting that planned dip in services construction revenue for now. The developing pipeline, that steady O&M growth, the retail expansion that's all central to the longer-term growth story they're trying to tell.
And strategically using those acquisitions, TRK and RECC.
Yeah, they keep highlighting TRK and RECC as key platforms, not just for the O&M growth, but as pathways to expand geographically Western U.S., Colorado, and also to diversify the types of projects they do, specifically calling out wastewater treatment alongside desalination.
And that cash position is definitely something to keep an eye on.
Absolutely. The sheer size of the cash balance, combined with management saying point blank, they're evaluating how to use it for shareholders, possibly through higher dividends.
Yeah.
Yeah, that's definitely something investors are going to be watching very closely.
Okay, that gives us a really solid summary of the call, the operations, financials, the outlook. Now, you know what time it is. Our favorite segment that is absolutely, positively not financial advice.
Let the speculation begin. Purely illustrative, folks, based on themes from the call. Do not, I repeat, do not trade based on this.
Okay. Idea number 1. We'll call it the Hawaii green light leverage play. So management expects construction to start early next year, but it hinges on those permits and the official notice to proceed from the client, right?
Right. And the Q&A showed permit timing is the big unknown, the external factor.
Exactly. So the speculative trade idea here is, once those key external permits clear and the company formally announces the notice to proceed for Hawaii, this massive multi-year project, that event acts as a major de-risking signal. This project is their biggest declared growth driver. So the idea is a leveraged bet, timed just right for that potential announcement. You're betting the market will react strongly when that future 2026, 2027 revenue suddenly looks much more certain.
Okay, I see the logic. The obvious risk, though, is getting the timing wrong. Those government permits could drag on longer than anyone expects.
Totally.
If they get delayed, your timing is shot, the catalyst doesn't happen when you thought it would. You'd almost need inside info on Honolulu permit processing times, which good luck with that.
Metaphorically speaking, yeah. Okay, idea number 2, the cash catalyst anticipation. The company's got over $100 million cash. They said they're evaluating how to deploy it for shareholder value, even mentioned dividends. Their next earnings call for Q2 should be sometime in August. So the speculative idea is you buy the stock maybe in July, leading into that Q2 call. You're basically betting that management might use that call as the moment to announce their decision on the cash. Maybe it's a big dividend hike, maybe a share buyback program. Either announcement could potentially pop the stock.
Yeah, it could. But the uncertainty there is huge. Management said they're evaluating. That evaluation could take longer. It might not be done by August.
Sure.
They might decide to keep the cash for an acquisition. Or maybe they announce a tiny dividend increase that underwhelms everyone. Or nothing at all. It's pure speculation on if, when, and what they decide about the cash.
Absolutely. Again, just thought experiments riffing on the call. Strictly for entertainment, not financial advice.
Investing carries real risk. These are just hypothetical scenarios based on call commentary. Please be careful out there.
So let's wrap up our deep dive on Consolidated Water's Q1 2025 earnings call. What are the absolute key takeaways you should walk away with?
I'd say number 1, Q1 results were down, but predictably so because of big projects ending. It's transition phase for services. Number 2, the core underlying businesses, especially retail and manufacturing, look really robust and are growing, providing a nice offset.
Okay.
Number 3, the future growth story heavily relies on the big Hawaii project. It seems to be moving forward technically, but the construction start timeline really depends on those external permit approvals. That's the key variable. And number 4, they have a ton of cash, and they're actively thinking about what to do with it, potentially boosting shareholder returns.
And just to reiterate, this summary is purely based on the information given out during that specific earnings call?
Right. And like they always say in their safe harbor statement, any forward-looking comments, things they projected, things we discussed about the future, they aren't guarantees. Stuff happens. Risks, uncertainties, actual results could end up being different because of the economy, regulations, weather, land and new contracts, all that jazz.
Yeah. So for you, the listener, if you're tracking this company, the 2 big flashing lights right now are probably keep an ear out for any updates on those Hawaii permit timelines that unlocks the big growth engine. And secondly, listen closely for any news in the coming months about how they plan to deploy that significant cash balance.
Yeah, those feel like the pivotal points to watch going forward.
All right. Well, thanks for joining us for this deep dive. We'll catch you next time.